Evening, everybody. Thank you for joining us for Wheat Wisdom Wednesday, I think. A couple of housekeeping things. If you have questions, you can either drop them in the Q&A or in the chat. We have access to both of them, so please feel free to do that as we go. Angie, did you want questions at the end or throughout?
At the end is probably the best way to do it if we could, because sometimes I'll catch them later on. So you don't
Perfect.
want me
So
going off into the weeds. I can tell you that. Everyone will probably agree.
that is fair. All right. So we'll do questions at the end for her, but drop them in the chat at any time. And with that, I think Jody's going to introduce Angie.
I am, and just give a quick update. This is one of those topics that, marketing, especially these days, we're also interested, wonder what we need to look for, what's on the horizon. And as we talked about it, it just seemed like this was probably a good time to bring back our Wheat Wisdom webinars and share information with you, the growers, through the Wheat Checkoff, the Michigan Wheat Program. We are taping each of the sessions that we are doing, and those will be on our website. So ask your questions at the end, but if you think of something later or you want to go back and hear something again, you will have access to all that. And when it is up and on the website, I will email back out to all of you so you can go and listen to that. Because our speaker tonight, I'm very excited. Our speaker tonight is Angie Setzer. She has dedicated over 2 decades to the cash grain industry, beginning her career as a cash grain broker. Early on, she recognized the need to support farmers throughout their entire marketing journey, creating long lasting relationships that continue to this day. In 2011, she transitioned to become vice president of grain for an independent chain of elevators. During her 10 years there, she managed grain storage operations and pioneered a state of the art direct ship program. In 2021, Angie launched Consus, a farmer focused consulting group. At Consus, she assists nearly 80 farmers and a handful of agribusinesses in improving their grain marketing strategies through a common sense, practical approach. We are very excited to have her because beyond consulting, Angie is a respected market analyst and has appeared on Bloomberg Television, BBC News, Fox Business, and Market to Market. She's also a repeat guest on Bloomberg's Odd Lots podcast and is regularly quoted in leading news publications worldwide. And tonight we are excited because she is focusing you guys on wheat. So you're going to
Yay.
hear all of this 45 minutes all about wheat. So with that,
All
Angie,
about it.
I'm going to let you go.
All right, I'm going to go ahead and get started here. I'm going to share my screen. So hold on 1 second. Oh, I have to send the request. So I sent the request. There we go. Multiple presenters can share. All right, we'll go ahead and get this shared for you. I'll pull this up. Don't mind me. You have to see how the magic happens to get started here. So let's swap these real quick. Bow, bow. There you go. All right. So I wanted to get started today and really overall, just I feel like marketing through chaos is the best way to capture what it is that we are trying to do here. It feels like every day is a new adventure and something that is unprecedented or something that, maybe you thought you had worked through already and weren't going to have to work through again. But here we are. And you already heard a lot about me there in the little bio. But as of last week on Friday, I've been doing this for 21 years now, which is absolutely crazy to me. For those of you who have known me for an extended period of time, or maybe you're like, did she start at whatever? Yeah, it was Kahuna Trading with Brad Granny in 2005 that I started before going over to Citizens in 2011. I spent 10 years at Citizens, really just kind of building up our handling overall. We went from about 3.5 million to just over 15 million in the time that I was there. I left in 2021 to start Consus, and really was just kind of like time to see what I can do on my own. And I'm really grateful we're working our way towards year 5, that's actually worked out really well enough that my husband Carl has been able to join me. And we are able to provide, daily cash grain insight to hundreds of subscribers. I have over 80 farmers, or nearly 80 farmers. I have to update my numbers here pretty soon, that I help manage cash grain risk on. We do some origination with some hog feeders and things like that. And in my spare time, I do a little bit of market analysis, and that's what's led us here. Tonight's agenda as a whole, I really want to talk about the overall market narrative. I want to run through the supply and demand figures as presented by the USDA, kind of talk about whether or not we think those are accurate or not, we being me, dig into anything that I'm going to watch in the world market that could impact your old crop values. I want to talk about why new crop wheat could have a story, and what it all means for you and your wheat, as well as do a little bit of a quick rundown of what's happening in the other markets out there, their overall fundamentals, that be corn and soybeans, and then really wrap up with what it is you need to be thinking about in 2026. And so big picture, what is going on today? Unfortunately, you're all very well aware of the fact that the market narrative remains the same across most grains and oil seeds. Like, you really can't get much of anything going in any ag food related commodity, let's put it that way. Everyone keeps talking about big supplies and lackluster demand. My eyes twitch, specifically the right one, when people talk about lackluster demand, is simply because that's not fitting with the data. But that is the narrative of the market as a whole. Any sign of cash market strength right now that we see, which in a bull type market, or even a neutral market as opposed to a bearish market, if you were to see signs of cash market strength, a lot of times that's attributed to, hey, maybe something's happening with supply, maybe something's happening with an increase in demand, something like that. At this point, any sign of cash market strength by analysts out there, they're attributing it to a lack of farmer selling, which also makes my left eye twitch as opposed to the right. And when it comes down to it, there is almost zero worry of a production or logistical issue. It's almost like we're just impervious to risk anymore on the grain side of things, partly because we have expanded production around the world. We have, northern and southern hemisphere production growth that we've seen. And we've worked our way through what would be some, really sort of surprising, unprecedented sort of situations via COVID and some of these other things. It's almost like no one anymore thinks that you could have any type of issue in grains in general. And then overall, a big picture, governments want to maintain low food prices around the world. This administration has done, has made no bones about it. They have not hidden the fact that they want to reduce food costs. We hear about it quite often, what they've done with wholesale eggs. We're talking about all of the other factors at hand. And so, they're not the only ones, obviously. Governments around the world want to maintain low food prices, and it helps to, in doing so, to keep wheat lower, or plentiful supplies of wheat on hand. This is the July 2026 wheat chart, and it basically just shows you that, sure, you could have thought a year ago in June, July timeframe, you could have booked $6 wheat at that point had you been thinking a year in advance. But basically, since then, much of the time period, much of what we've seen is July wheat basically floating right in this 560 sort of area. We did see a bit of a dip there late last fall. We got a recovery here when China started making some purchases of white wheat, and we saw soybeans rally, kind of a little bit of a setback. And then, of course, China did cancel some purchases the first part of December. And we've just seen wheat really fall off ever since, and is working to consolidate currently, right in this 530 to 540 sort of area on the July. Looking at world wheat production as a whole, I hope this isn't in the way. I never know if you can see what part of the screen here, but one of the things that is important to look at here, one of the reasons that everyone is so negative as a whole, is that world wheat production basically expanded, according to the USDA, 1.5 billion bushels from last year. The majority of that expansion took place in the European Union. You see 22 million million metric tons of growth, over half of world production expansion is supposed to have taken place in the European Union. They did have much better growing conditions this year and some of these other things, but the EU is one in particular that a lot of folks are very insistent that there's a significant amount of wheat on farm in bags. And I don't know how many of you have experience with holding wheat long term, storing wheat long term. I can tell you wheat is the rabbit of the grain world. Like wheat will do everything it can to try to go out of condition. It will just try to make your life miserable, whether it's through bugs, whether it's through sprout eventually, whatever it might be. Wheat is not something that you stick in a bag and forget about. And so it will be interesting to see how the European Union cash market trades, especially because we've seen basis, show signs of strength that wouldn't necessarily point to such a substantial increase in production. We're talking about over 700 million bushels of increased EU production. And the cash market itself is not showing that. In addition to gains in the European Union, you're looking at Argentina here. Argentina managed to outproduce their former wheat record, if you believe the government at this point in time on production. And you always have to trade what the USDA tells you, but I am going to work to reconcile that against what cash shows us. And then so far in Argentina, their cash market has been under pressure, but they have outpaced their former record by over 250 million bushels, almost 10 million metric tons of production growth over the former record. You saw that in Argentina. Australia's wheat crop was very, very large as well. Russia up 8 million metric ton. That one doesn't pass the smell test necessarily either. But on the whole here, looking at what the USDA provided us in the January report, world wheat production is thought to be up 1.5 billion bushels from last year. One other point of interest when looking at, I always do that. When looking at world wheat production, let me step back here real quick, is that, whatever, it doesn't matter. India, though, was on there. You saw India's production bounced up. India is thought to maybe be ready to enter the global market as an exporter. You saw the soft red wheat market under pressure yesterday as somewhat of a result of that. We'll watch. India has been saying that they're going to come into the world market as an exporter since the war, since the invasion. They had told us that they were going to supply the world in 2022 when we saw the Black Sea issue arise, and they never exported a bushel. You did see yesterday, though, that they had approved around 50,000 metric ton, I believe it was, of wheat flour for export. And so that'll be something that we watch is, obviously the overall idea is that we have burdensome style production. And if India enters the mix, then, that's even worse when in reality, they're not going to have more than a few million metric ton that they can offer up, and it's going to work into local markets. Looking at world wheat supply and demand as a whole, we just saw supply. Let's look at, supply versus usage. The most interesting part is, right, like we talked about before, production across the world, around the globe, is up 1.5 billion bushels. The very first part that I told you, the narrative, right, is that world demand is not there. It's not that great. That's a lie, obviously. Your gains in usage are pretty steadily solid across the board in different places. Yes, we've had supply, but we are seeing more in the way of total use in the world's largest wheat users. And we're also seeing increases in trade via the world's more smaller wheat buyers. And so what I found most interesting about the increase in overall supply, of course, is yes, the USDA is telling us this, the world governments are telling us that we have these big supplies, but we're also using over half of the supply increase. And so what's important about that is typically once you see that gain in usage, it's going to take something to change it. And that doesn't necessarily mean a little production hiccup to chew through stocks. That means something big because you're getting used to either having the food, using it for feed, whatever that may be. And so this idea that we don't have the demand is really kind of a fallacy and will be something that could really create some dynamic marketing opportunities potentially if we were to see any type of production hiccup happen. What's happening domestically here, if you look at the U.S. wheat supply and demand numbers, pretty flat. I mean, we saw an increase versus a year ago of about 70 million bushels. We had big production numbers, though. We were at least a stagnant production. We were able to yield more on the acres that we produced, and really, in the end, from a usage sort of standpoint, it was relatively flat. We did see the USDA back their feed and residual number down in the last report. I think that was premature. I think they did that simply because they had to try to compensate for the feed and residual increase in corn that was driven by the surprising increase in production. And so one of the things that I will tell you about the USDA is they do tend to and I've spent a ton of time talking with Lance and Seth, just had a webinar with the both of them last week. They do massage numbers, and I hope you don't take me using the term massage wrongly, but they do make numbers work, and they will take one number to feed off another number. And so you could see feed and residual usage potentially bounce back up a bit in wheat. And you also could see some export demand pick up a little bit. But in the end, we're going to end up with around 900 million bushels of wheat at the end of the year. It's a 45% stocks use ratio, which is about 10% higher than typical. And the USDA expects old crop wheat, the average market price, to end right around that $5 a bushel level, which is super not great. And honestly, you could see, like I said, some minor adjustments, but the old crop situation is relatively made. Digging in to the by class breakdown over here, just to kind of show, because we grow the soft red white winter and the white winter here in Michigan. These are the ones that you want to look at. This year's carryout 25-26 is expected to be around 141 million bushels for the soft red winter wheat, 77 million for white. That is up a little bit from last year for red wheat, for the soft red, and a little bit lower for white. But in the end, it's not a tight sort of scenario. In 2021, 2022, we had 94 million bushels of soft red wheat carryout and 52 million of white wheat. So we were 25 million bushels below this year, and over 50 or around 50 million bushels lower than this year on red there. And so really when it comes down to it, if you want to look at the by class supply and use numbers and kind of get a feel for whether or not each individual component of the market structure may have more opportunity to rally or not, because you do have different individual wheat classes. Here's your Kansas City, here's your Minneapolis, here's your Chicago. And so we will look at our by class, but as an overall sort of standpoint here right now, there's no concern that we're running short of supply, and we should have reasonably decent carry-in when we start the next marketing year. Moving over into where is the wheat, if you want to know where the USDA says total wheat stocks are sitting, this will give you some insight into that for sure. And really, when it comes down to it, here in Michigan, we're looking at about 6 million additional bushels of wheat versus a year ago. It's not really a ton, but it is a ton at the same time. And part of the reason why your local wheat basis is relatively weak, comparatively speaking, we're looking at 20 under into King Milling and some of these other locations, pretty much every mill out there. And traditionally by this time of year, you might see a bit better in the way of basis. And so we do have a bit more in the way of wheat on hand. Here we are seeing more in the way of wheat on hand in Illinois. Ohio is pretty well flat year to year, as is Indiana. Kentucky and Tennessee are also wheat contributing states, and so is Missouri, but the USDA really didn't spend a ton of time outlining what you had there. The biggest gains in supply that we're seeing, obviously, you have some increase out west. And then in here along the plains, which is part of what's weighing heavily upon the market, is that pretty much your hard red wheat, your Kansas City wheat, is seeing exceptional growth in stocks year over year. Like Kansas alone, 71.5 million bushels more year over year than a year ago. That's a pretty extraordinary jump, and is also going to be somewhat heavy on the whole entire complex, because they are anticipated to have reasonably large planted acres. So we'll talk a bit more about that here later on. So is there anything bullish out there for wheat? Sure is. There sure is. Long story short, not today. I can't sit here today and be like, yeah, we should rally a buck tomorrow, simply because we do have a lot of old crop things to work through. But I really am watching closely when it comes to Black Sea shipments and the overall production outlook as a whole out of the Black Sea. We'll talk about more why here in a minute. I'm watching China. The situation in China should have everyone's attention, even though it is somewhat hard to kind of reconcile versus what they are saying, versus reality. But it is something to be paying attention to. Supply and demand, planted acres, and demand projections out of the U.S. are going to be something that I'm watching as we move forward in a big way as well, simply because that could have a huge influence on new crop overall availability. And the U.S. has provided the world, or has kind of gotten the rest of the world used to now over the last few years, of being able to come here and make purchases and know that they're getting the highest quality, most reliable supply. And so we'll be watching just how the overall demand projections fit in with supply, because a lot of U.S. farmers right now are looking at the acres, even that they had planted last fall, and wondering if they want to commit to bringing them into production with the way that the markets looked. We're also going to watch the rest of the world outlook. And like I was saying before, there is huge demand from global end users in wheat. Like we cannot ignore that. And that's one of the things that's been most interesting about the conversation this week as well. Like you can tell analysts are working very, very hard. And I'm not ragging on analysts at all. It's just, it's one of those things where you can see messaging you really, really clearly when you're kind of looking at the data and you look at how different people share or provide a narrative on the information that they're putting out. And so one of the things that I found most interesting this week is that everyone wants to talk about how there was a lot of supply available to what were exceptionally large tenders. Like you don't traditionally see some of these countries come in and buy 1 million metric ton or around 1 million metric ton at a time. And we saw that this week. And most of the analysts out there are like, yeah, the tenders are big, but the market was able to easily supply them. That's cool. And that is fine until something happens in the market isn't. We're building this continuous large demand. That is a great thing. But it is something to watch, or it makes the potential for a weather problem that much more explosive as we move ahead. Digging into the Black Sea here, we've had an escalation in the war, and there's been some issues, obviously, with messaging, or maybe some miscommunication, or some lack of clarity on the part of folks working towards peace. And I'm not going to say that we aren't trying to get closer to peace every day. The administration's working on it. Witkoff and Kushner are in Russia as we speak, I believe. They are trying to come up with something, but you're really not getting anywhere. Like, let's be honest and call a spade here. Both countries have heavily increased their attacks on both logistical and energy infrastructure. You have Ukraine saying that they are going to do away with Russia's Black Sea shadow fleet and attacking different parts of ports. They've basically taken their navy out, that they've parked at ports. Like they have some issues with loading. You've seen slowdowns in their ability to put wheat on ships. You've seen an increase in war risk premium for shipping and things like that. In Ukraine, you've seen Russia strategically target rail bridges. Ukraine's done the same thing in Russia. So your rail bridges have been knocked out. And honestly, at the start of the week this week, I believe it was the deputy of infrastructure energy deputy, one of the folks that are on the higher end of things in Ukraine, basically said they have one fully functioning energy plant. Like Russia has completely destroyed a good portion of Ukraine's energy infrastructure. They can barely keep the power on in their houses. Yes, you have ports and different companies investing in generators at ports so they can load, but you've also seen civilian ships targeted. You've seen people injured. You've seen all of these different things. And so it's going to be interesting to watch. Russia is expected to have around 29 million metric ton of the 45 million metric ton of wheat exports shipped out as January wraps up. They do think, some folks do believe that that might be even a bit less than that. They're struggling this month. Weather has turned a bit poorer. Obviously, the war risk premium has increased. Ukraine's ramped up the attacks on the ships that are working in and out of their ports in the Black Sea. And so right now I'm watching very closely over the next 5 months, 4 months now, between now and June 1st, is Russia able to export the remaining 16 million metric tons that the USDA is saying that they will? I doubt it. 4 million metric tons is the higher end. That's a lofty sort of level for Russia to be shipping wheat. They can. I'm not going to say they can't. But that's typically 4 to 5 million metric tons is the level of wheat that Russia is shipping directly after harvest, when everything is kind of wide open and good flow. And so I'm going to continue to watch that, simply because we will see other countries have to start sourcing supply elsewhere if they can't tap into the Russian bushels, the rest of that 16 million, which is about 500, around a half a billion bushel of wheat that is left there, is supposed to be moving. Ukraine is the same way. Their shipment pace is lagging in a very big way as well. They've shipped around 8 million metric ton of the projected 14 million metric ton of expected shipments. 6 million metric ton of wheat is not a huge amount. It's 150 million bushels or so. But that is something that is of interest as well, because those are bushels that the world, the analysts, the USDA, all of these folks are expecting to work into the global supply. If they do not, someone has to cover bushels elsewhere from a different supplier. Digging a little bit further into the Black Sea here, we did have a poorer fall planting campaign, and there are increased worries, about the war that could impact new crop production. I'm going to tell you guys straight up, the Ukraine and Russian farmer, both of them are looking at a very different war than what has been fought even a year ago. A year ago in Ukraine, you were seeing Russia really work to target Kyiv, maybe Odessa occasionally, but they were really focusing on Donbass and different territory in the eastern section of Ukraine. Part of the reason that the market was able to move on from the war as quickly as it was is that we created the Black Sea corridor. We saw basically the life across a good portion of Ukraine return to a new normal. I can't say normal because I don't think your country at war would ever be normal at all, but they felt relatively protected. Ukraine had a really solid air defense system. They were able to knock down 90% plus of any of the errant sort of drones or missiles that Russia had launched. And so, for a good 70% of the country, you're able to kind of operate somewhat as usual. Farming took place. You moved grain to the end users. You had subsidies come in to help cover some shortfalls and things. For Ukraine, they were able to kind of continue. In Russia, the war wasn't up the road. The war had not yet disrupted things a year ago. Ukraine has really ramped up their attacks on Russian energy infrastructure, refineries, and all of these other things. And you've seen it impact Russian citizens' ability to access diesel, access fuel, access credit, access you name it. There's a very different structure in the Russian economy than what you saw before. Not to mention, you are seeing Ukraine kind of launch more attacks. They're not really targeting civilian or farming infrastructure or anything like that. But if they continue to hit logistical infrastructure, these rail bridges, if you continue to struggle with having access to energy and things like that, it can get real interesting and a lot more difficult to produce these massive crops that everyone says Russia is producing. And so that's going to be something to watch. As I mentioned, acreage has been reduced in both countries due to several different factors, weather, money, you name it. And so what does the global balance sheet really look like if problems plague over 100 million metric ton? We're talking 89, million bushels or million metric ton, or 85 million metric tons of production in Russia. You're talking 20 some million metric tons in production out of Ukraine. What does that look like if we do see something impact the 3 billion bushels of wheat that are supposed to be moving out of the area, and exports are slowed? And so it's just going to be something that we watch as we move forward, simply because it could become interesting if we were to see China's wheat woes come to a head at the same time. Also, you have to say China's wheat woes at least 3 times fast after we get done with this, just to see if you can do it. China had a solid wheat crop last season, according to reports. You look at the USDA numbers, you look at different things. They were steady. The quality was better. A year or two ago, they had really poor quality wheat, and that had led them to have to come to the world market and import some supplies for blending. Last year, they didn't have that problem. A lot of their wheat looks really good, though they did have a pretty major fall weather issue arise. And partly maybe because of that, maybe because of what's going on with corn, because their corn was impacted, and the fact that we're seeing feed production increase and a handful of other things, you're watching China's domestic wheat values continue to climb. As I mentioned, there's been some reports of quality issues, but they seem minor overall. It seems more of a focus on new crop potentially with the quality problems. And we had seen China kind of play the will they or won't they game. They had bought some white wheat at the end of the year from the PNW. They then canceled it at one point. If they do come in and make a purchase of white wheat, it'd be a bit of a surprise. Australia just had harvest. You do have some available supply elsewhere that would work for them. But it is going to be something that we watch really closely, simply because they could come in. As I mentioned, the US has the highest quality, most reliable supply in the world. And so if they need something that they know they can blend, we're your huckleberry. They are clearing auctions of very old wheat. They had an 80% clearance today of wheat from 2018. Last week, I believe it was a 100% clearance of 2017 wheat. And so I may have to walk back a little bit about what I said before about wheat being difficult to store, simply because they seem to be able to do it somehow. But the demand is there, and it seems to be something that we want to pay attention to, because if you were a wash in wheat, if you'd had a massive amount of supply or whatever, would you really be buying wheat from 8 years ago? Now, I will say it's probably being used for feed, so it might be a little bit of a different scenario there. But they are clearing out the reserves in order to put more wheat into, better wheat, newer wheat. They're rotating stock, if you will. And so that's something to watch. New crop production is going to be the thing that I pay the closest attention to. And I talked to you a little bit about that, or kind of explained why here. But when you look at the fall, we had wheat planting in China that was extremely delayed in their main producing provinces. So Henan, Shandong, and a handful of others, we had an exceptional amount of rainfall. Like, we're talking the most amount of rain between the end of September through October into November since like 1961. It was just an epic amount of rain. I have a consultant that I work with that specializes in Chinese production. And he shared pictures from the local news out there of them trying to hand shell corn as they walked through basically waist deep water. It's very difficult to plant wheat when you have incredibly large amounts of standing water. And it did eventually dry out in China, but the majority of their wheat went in these very important provinces very, very late October, very, very early or middle part of November. They were still reporting planting progress taking place the second part of November. And even the state government has confirmed that planting wheat that late is likely to lead to production reductions. The weather has been less than ideal in a lot of these places lately. They've seen some cold snaps. They've had some different things where it's just been not great. Even the government is kind of recognizing that wheat conditions are somewhat poor. There is talk of upwards of 10 to 20% losses on production. That would be incredibly substantial. Remember, China, produces 100 and some million metric tons of wheat. I doubt that the government will admit that the losses are there at all, though they can't hide what the cash market do. And so we'll be watching for signs of worry in the form of them front running the rest of the world. If there is a supply issue that is concerning to them, you will see China quietly step in and start purchasing wheat from everyone at the same time. Basically, we've watched it before. They'll make a purchase from the US, they'll make a purchase from Brazil, they'll make a purchase from Argentina, the EU, the Black Sea, whoever is willing to offer them wheat, they're going to buy it right at the same time. And we saw them do it before. And so if you start to see that arise, just kind of put your spidey sense on and be watching, because this will be something that could be somewhat explosive for price, or finally maybe show if we truly have that real global supply out there that the USDA and these world governments say we do. Looking at new crop acreage and the new crop balance sheet as a whole, we've got the winter wheat acres report out in January, a couple of weeks ago. It's on brand. It was on brand with the overall report in the sense that winter wheat seedings came in higher than expected as well. That entire report that was released last week, it was as bearish could be. I don't think there was one bullish input in that thing. The biggest surprise in the acres, though, was in the Southern Plains, though I don't know if we can call it surprising. They did have really solid conditions last fall. They gave themselves, a good start with soil moisture and some of these other things you obviously have seen that were feeding more in the way, or well, not more in the way, but feeding cattle is something that is working well for folks out that way. Grazing cattle on wheat is definitely a nice, easy way to provide some feed without laying out, more than a whole lot of costs if you do decide to go through with the wheat. And so, like I said, there's lots of talk of grazing and other usage opportunities down there with those great fall conditions. It's just a question of whether or not they carry those through into harvest. If economics stay as they are, it's doubtful. Just digging into what a new crop balance sheet could look like in wheat, and honestly, without some type of weather issue or something surprising in that regard, we probably won't see things get too crazy. I think demand stays relatively lofty or steady year over year. I think we see obviously an increase in the beginning stocks year over year. Production, though, I do anticipate to be a bit lower. I just don't see us yielding what we were able to last year. We have talk of more in the way of potential El Nino effects. So we have seen some drier conditions in the Southern Plains. And I think people are struggling to really invest all of the money that they need to invest across the entire complex into wheat production, especially when looking at the overall P&L when it comes to growing wheat. And so it wouldn't surprise me to see it's coming closer to 24, 25 on the yield side of things, around 51. It still puts ending stocks around 772. It's comfortable. 772 would give us an opportunity above 550, maybe work its way towards 6 at one point if there were any sort of weather deal or something like that come into play. But it isn't something that's going to send us to old highs that we saw here post invasion or something like that. But it basically just gives you a little bit of insight domestically that we should be comfortable. And that's why I look to the rest of the world as probably the more important story, or the story that I'll be watching closely. Looking at the buy class breakdown, Chicago wheat does seem to have the best opportunity for a story going forward. A lot of folks think the acres are lower than the current USDA estimate. The dry fall really brought into question, too, if folks were able to see wheat get relatively decently established. We're obviously not making money growing wheat at the current price either. Basis is somewhat wide, and so it'll be interesting to see if folks kind of carry that wheat forward into full grain production. Soft red wheat demand, though, has been really solid in the export market, and it's really solid domestically. It's a good wheat. Everyone is happy, even in the GLP times. A lot of folks are worried about the Ozempic effect and some of these other things. But we seem to have really solid demand for soft red wheat. I guess even if you're on Ozempic, maybe you want a piece of a cake if you're sad, or some cereal or something. I don't know. But it is helpful. We are seeing really solid demand in that regard, and that is something that should keep our values underpinned, if you can call it that, at these levels. Kansas City wheat looks to have another year coming with abundant supply if there isn't a weather issue. The biggest acreage gain in the January report, like I said, versus expectations, was in hard red winter wheat. We could see increased risk of abandonment, like I said, or acres used for grazing and not brought into production. So that'll be something we'll watch. We'll also watch to see how spring weather is for overall weather as a whole, or overall production potential as a whole. Spring wheat is a toss-up. A lot of folks up in the Dakotas and parts of western Minnesota, it was almost a guarantee they were going to have wheat on the farm. It's not that guarantee anymore. The money does not incentivize planting currently. Most of the customers that I talk to that have grown spring wheat in the past are not looking to do it again this year. They may, simply because they need to keep the rotational aspect. But you have a lot of growers up there that used to rely heavily upon spring wheat is to bring money into the operation that are now growing corn. Maybe they're growing soybeans. You have some additional soybean crushers up in parts of the Dakotas. You look at the situation in Montana. They're not excited if they are growing spring wheat. I've got a guy that I work with out there that is a hard red winter guy. But up the road they've got spring. It's just one of those things too. Spring wheat is so much pickier. Like, we're so fortunate in the soft red wheat world to not have to worry about protein and all of the other factors at hand that can impact spring wheat. And so to me, it would not be a surprise to see spring wheat acres down significantly year over year, especially because values have been flat. If you look at Minneapolis wheat, the front month has traded around 565 for the entirety of the year, almost similar to the front month on Chicago wheat trading around 530 for the entirety of the year. It's just one of those things where it doesn't really get anyone excited to dive into the wheat production world. So what do we do about it? We have to recognize, I think, just how range bound wheat is. One of the struggles that we have in old crop, or I've had in old crop, is I have customers, and not to overshare by any means, but we have basis contracts. We have things that we've waited to see, because folks just, it doesn't feel good to sell 530 wheat or 480 cash or whatever. And so we'll just put it on basis and see what happens. And obviously, that hasn't been the greatest thing in the world to do. And not everyone has, but I know that there is a plentiful amount of people out there who have, or are looking at wheat and wondering, okay, what the heck are we going to do with this wheat? And how am I going to sell it? It's range bound. It's consolidating. You can say consolidating. I like to say consolidating because that makes it sound like we maybe could have a breakout to the high side eventually. Because let's be honest, if you look at a multi-year chart in wheat, this is National Lampoon style, the Christmas trees burnt down, the dog choked on a bone. Like, we're in the seventh circle of heck over here in the wheat market when it comes to price wise and all of that. And so I would say consolidating, simply because it does feel like we should rebound at some point. But it's important to just recognize that wheat basically doesn't have to go much of anywhere unless something develops. Rallies need to be sold, like I said, until something obvious shows up in the global supply conversation. And when I say rallies, I mean, hopefully we can get the front month back up around that 550 level, though it is disappointing to think about how hard we've worked to only see that a couple times here over the last 6-7 months. Typically, in any grain, and especially in wheat, we don't realize how overstated production outlooks are until something happens to reduce supply availability. Similar to 2020, right? We had a 3 billion bushel corn carryout. We had a massive amount of wheat carry out, all of these other things. Something happened. China came in to buy. We had some production hiccups, and all of a sudden we had to make some revisions to the overall expectations or overall thoughts on supply as a whole, simply because we had overstated production all along and just pointed and said, well, it's just not moving into the pipeline. It's there, it's just not moving. And it's kind of a repeat of what we're seeing right now. Be thinking about 2027 wheat well in advance. Like, it's one of those things where we don't like to think about wheat a year out a lot of times. But I'm going to tell you, in the 21 years that I have been doing this, there's probably only 2 that selling wheat a year out hasn't been one of the better options or better trades for you to make. Again, I know it feels uncomfortable, but typically you have really solid amounts of carry in wheat, and you see, even if the nearby market is at 550, or if the July board's at 535, July 27, is up around that $6 mark. So don't be afraid to be talking about committing wheat. Look at using HTAs, hedge to arrives, just future only contracts if you want some flexibility, something of that nature. I know it's difficult to contract wheat that far out a lot of times because basis gets wide and some of these other sort of situations. So you may have to be creative, but make sure you're thinking a year in advance on wheat, especially if it's a reasonably decent price or above that $6 mark. Use your target orders to get rid of any unpriced old crop on a bounce. At this point, a bounce is anywhere between 535 and 550 on the front month. I wish it wasn't true, but it is. On the old crop side of things, if you do have old crop that you need to be looking at pricing, the 550 side is probably going to be as high as she gets for a bit. Unless something big happens that none of us see coming, which would be a lot cooler if it did, I guess, at this point. One of the things I wanted to touch on is just common wheat marketing mistakes that I see across the state when I'm working with growers and we're turning bushels into cash. The biggest one, just kind of what I touched on there with 2027. And obviously, like, thanks, Ange, for the in-depth analysis there. But honestly, not selling enough wheat in advance. We get nervous a lot of times in the state. When it comes to selling wheat, you may have a smaller amount that you deal with. A lot of times I'll have growers, we're only maybe marketing 10 to 15,000 bushel a harvest. And so it feels like it's a lot to have 3 or 4 2,500 bushel contracts, especially if we do it really quickly. If wheat rallies a buck in a short period of time and you're 8 months and 8 months out there, a lot of times you might freeze up a little bit just because you don't know what you're going to have, et cetera, et cetera. But wheat tends to be one of those that we just never sell enough in advance, simply because the window to move wheat is a lot smaller than any of these other crops for a lot of growers that put it in the bin. That leads me to point 2. The biggest mistake that I see in wheat marketing is that folks will put the wheat away. They'll put it in the bin, they harvest it, they put it in the bin, and then they wait too long after harvest to move it. The window of opportunity in marketing wheat, if you have to move it prior to corn harvest, really is within 10 days of harvest. Most of these wheat mills, most of the mills in the state have covered their August, September needs by the 1st of August. So if you're one of those people that you have to have wheat out by corn harvest or bean harvest, you don't wait until the 1st of September to start working on that. Now, you want to try to move it in September because it's the sweet spot, and that's a whole different conversation for another day. But just to wait it out and see what happens, that's where we tend to really go wrong, because you end up running out of the opportunity at the mill. You have to deliver into the elevator potentially at an extra wide basis because they've already put away their supplies. Like, just make sure that you're kind of on top of it on what you want to accomplish. Make sure there isn't a lack of plan or a lack of ability to adjust the plan. You want to have that plan, and you want to make sure that you follow through on it, and make sure that you don't you don't just marry that plan. You want to be able to make your changes when the situation changes. And then honestly, having too much hope wheat is going to be different than it's ever been. I hate to say it that way, but we kind of got a little spoiled in 22 with it going to $13. We seem to think that that's where it needs to go all the time. That's not necessarily the case. Even $7 is something that is a lot to ask for in wheat at the current time. So just make sure that we're treating wheat like it really is. So just real quick, other markets, we're not going to spend as much time in this, and I'm going to kind of run through these. Everyone thinks we have more than adequate supplies. But a big bean crop coming out of Brazil. There's more concern over Argentina potentially, but not enough to matter yet. We've got the back and forth of trade war, tariffs, other geopolitical developments. Here's your corn balance sheet as a whole. Most of you know the USDA came out last week with the 22227. That was the worst case scenario. We already have massive demand in corn. We have record-setting ethanol feed and export usage projected. So the USDA is going to struggle to chew through this big crop size. The one thing I can say is that the 2 billion of projected additional production increase seems like a lot, and it is a lot enough that it should be noticeable, and we're not seeing it. We didn't see it at harvest. We aren't seeing it now. Many in the industry are struggling with the accuracy of the USDA's projections as a result of this, but we aren't going to see any changes or anything to really make a difference in that until we get through the quarterly stock figures, and those come out March, June, and September. And so as a result, old crop corn is likely to remain range bound without a South American production issue. On the soybean story, same deal. You know, the USDA came out, put carry out at 350 last week, left it production unchanged, really elevated versus what we expected. Biggest story in beans, China's bought the 12 million promised. There's questions over if they stop buying or continue. We'll be watching that very, very closely. The rest of the world demand has remained steady, but it's slower than we'd like to see, honestly. Brazil is going to have a big crop, but they're not just going to dump it into the world market. So we should see U.S. bushels kind of continue to move. We need to sell about 15 million bushel a week to meet forecasts. That's a super reasonable number and something we should see attainable. China's making some interesting moves with their reserves. We're seeing South American importers help support U.S. buying. You know, on that side, on the South American import side, China's kind of limiting what they'll take in for Brazil beans. That's helping support the U.S. side. We are waiting on biofuel clarity from the administration. It does sound like the renewable volume obligations will be on the higher end of proposals, but there's some confusion over how the tax credits will handle things. Crush is at the higher end of capacity usage as well, which is positive. And really, we're just going to have to look to new crop. And so overall, you know, the current narrative, the USDA projections keep market moves capped without some type of weather event. It truly feels like we're back in that 15 through 19 time frame, though hopefully, you know, this sort of recognition of that, it means that we're perhaps nearing that end. Paying attention to old marketing opportunities and using them as target orders is a great idea. So if you wished you'd have sold more 450 corn or 550 wheat, put a target order back in at that level. Where you wish you'd have sold more at is a great place to enter a target. I'm not talking $9 wheat. I mean 550, 585, things like that. And overall, without a weather issue, you're going to want to sell the rallies. And so just repeating most of what I've said here, make sure that you're taking a disciplined approach to your marketing. Have someone help you if you're struggling with it. Use target orders, recognize your non-negotiables, keep your head up. Don't make long-term decisions based on short-term feelings. Remember, this too shall pass, even if it doesn't feel like it. It'll come, it'll be done. We'll get to the other side. And so really when it comes down to it, biggest takeaways from tonight, we're coming into a seasonally strong time period for wheat that could provide some opportunity. They might be limited though, so make sure you're using those target orders. Old crop's going to struggle with 530 to 550. New crop will take weather and a war issue really to probably show some extreme strength, but you got to continue to watch that Black Sea situation in China because that's going to be where the bullish shift happens if it does. Inflation risk remains as well, but the funds can't stay exceptionally short forever unless spreads stay the way they are, and then they probably could. But get comfortable with call options too. I'm not a broker. I'm not here to sell them. But if you want to maintain upside without having to wait on moving cash grain, it's the best way to do it. And so with that, any questions? My contact info is right there.
Great, Angie. Thank you. That was awesome. Lots of things to pay attention to and be on top of market opportunities. And I think this is great to go along with, you know, at the last one, Dennis and John Laporte presented, and they had a spreadsheet looking at what are you doing for your input costs. So if you know what that input cost is, I think that makes it a lot easier to know what prices you can lock in and make sure you still have that margin. Because I know there's a lot of crazy market prices on the input side too. So I don't know if you have any comments on that, like how that all flows together.
No, it just all flows together. Just make sure you're tracking what it is that you're you know, what you're spending, what your cost is. Try to make sure that you have an idea of your point of profitability. You know, I've always kind of said that you don't want to market for break even. You want to try to market for a point of profit. The hardest part about wheat right now over the last year is it's been virtually impossible, you know, well in advance of harvest. You have to have, you know, $7 wheat practically to feel comfortable, or know that you're going to have $100 bushel the acre wheat to feel comfortable. You know, just all of these different things. It's hard to look at wheat right now and get excited. It's hard to look at anything right now and get excited, but especially wheat. But for sure, don't bury your head in the sand. You know, make sure that you're kind of recognizing where those costs lie and what you're really wanting to try to grab. And if you have the ability to make cuts here or there, or make some trims that won't impact production, obviously you're going to want to try to grab them.
Awesome. Are there any questions? I do not see any in the chat. I'm always looking at my phone because sometimes we get texted those questions. Jenna, do you have any questions?
I'm not seeing any in right now.
Awesome. Well, Angie, we appreciate it. I took a whole bunch
Yeah.
of notes on the side, and I want to make sure growers know we will do an email out to you. But if you go back to our website at mywheat.org and you can scroll down right underneath where you were when you signed up, and there is a section that says you can go click here and you can see webinars, you can see past events. So click there and you can get back to all of this information. And in the presentation, we have Angie's contact info. So if you need help, if you're not sure what to do, because these are crazy times, reach out to someone because we were talking. This woman is up at like 3:30 in the morning, living this and breathing this. And that is just something most of us can't do. So take advantage of the experts that are out there. And in these tough times, um, do the best you can with what you're putting in and watch those markets to get opportunities out. So I do want to make sure really quick that I also mention that we are going to have one more marketing webinar that's coming up. That is going to be February 4th, again at 7. And Joanna Fallings from Ontario and our own Dennis Pennington have really looked at what makes a difference when you look at having wheat in your rotation. So it's not just for the wheat crop, but there's benefits to corn and soybeans and your bottom line. So I want to make sure that you guys get signed up for that and that you are on and able to hear that other piece of marketing as we pull that together. And with that, Jenna, I'm just going to do, is there one last call? Any questions?
Oh, there's one question. And also, as we get to taking this, if you're more of a podcast person, these will be posted on the MSU Field Crops podcast as well that you can share. And Angie did a great job describing what was going on in the graphs. So it should be a pretty easy to listen to podcast to follow along to. So our question, do you see it, Jody? It's in the Q&A.
No, you got it. You can.
All right. So the question is from Nicole. She says, what to expect on urea this spring as prices go up?
Yeah, I'm not a big fertilizer price person, but it feels like as we work our way towards spring, anytime we see a spike in demand, you're going to see an increase in price. It just feels that way. You know, talk to your supplier because I don't want to overstep or speak out of turn in that regard. But it feels like as demand picks up, you know, I think a lot of folks may have been a bit tighter on cash at the end of the year. You may not have had a level of prepay and some of these other things, and so just watch out for it. It feels like it's rare to see things get exceptionally cheaper right now in this economy. I like to say it that way.
Anything
That's
else?
all. That's all we have in there, Jody.
Awesome. Well,
All
Angie
right.
Setzer from Consus, thank you so much. It's always a pleasure to get that look and know what we need to be paying attention for. Folks, make sure you're watching the markets and we will send you more information and hopefully we'll see you back here in 2 weeks.
Have a good one.
Bye.